Welcome back to Fast Market, everyone. Kevin Hinks and Alex Coffey back for our cash tag segment. Now I'd like to bring in the co-founder of LikeFolio.com, Mr. Andy Swan, to the show. He's going to bring some LikeFolio data about Shopify. Andy, your data, glancing at it, is Shopify as dominant in real life as your data shows? Because this data is impressive.
Yeah, it is. We first got bullish on Shopify about 22 months ago, and the stock is up over 100% since then. So you come into an earnings report like this, you come into an event like this, you're almost looking for reasons to take money off of the table. But with LikeFolio data as strong as it is, you really can't find any reasons. I mean, we're seeing impressive growth in all of the metrics that we track. We saw Amazon's report showcase extremely strong e-commerce sales, which bodes very well for Shopify. We're seeing mentions accelerating, up 12% on a 90-day moving average and 21% on a 30-day moving average. So the acceleration is accelerating. And then when we look at web visits, I think this is probably the most important metric that we have for Shopify, because what it tells us is how much are people turning to Shopify as a solution for their small business, for their direct-to-consumer operations. And web visits are just completely dominating every peer out there. We're talking about some great companies like Block, like eBay, PayPal, and Shopify just dominating in terms of growth tells me that if you're looking to produce e-commerce outside of Amazon, then Shopify is becoming or has become the default solution. And so, this combination of mention volume uptick, web visit growth dominating peers, even consumer happiness is moving up 3% over the last year. And they're doing all of this with a smaller staff. They laid off, I think, about a significant portion of their employees. I'm not going to give an exact number. I don't want to get it wrong, but they went through some layoffs. They cut some expenses, and they're still able to deliver massive growth and a very good experience for their customers. That's exactly the type of thing that we like to see. So we're expecting a strong report from Shopify. It's just a matter of, how high is the bar that Wall Street is setting going into this? Because I don't think we're the only ones with an optimistic outlook for this company.
Yeah, well said, Andy. Question to you is, are companies like Shopify a little bit tougher to track at LikeFolio because they kind of hang in the shadows? This is sort of the back end, a company that you got to tip your hat to. They found a need that the market had, and they just totally executed to the T. But oftentimes you're probably associating that shopping experience with the brand or actual company that you're doing business with. You just happen to use Shopify to do it.
Yeah, absolutely. You make a great point, because people don't talk about shopping at Shopify. They talk about shopping at the brands that use Shopify. But what we have found when you start talking about companies like this, this isn't like a typical B2B operation where they have, contracts with companies that are pretty much kept under wraps. When people go to Shopify, smaller businesses, even some medium-sized businesses, the people making those decisions actually do share those opinions on social media, and they do use the website, Shopify.com, in order to facilitate a lot of what they're doing. It's a little bit out of the shadows, in other words. And so the data that we do have suggests that not only are more and more people flocking to Shopify to set up their direct-to-consumer business, but they're increasingly happy with what they find. And so, we think of Shopify as e-commerce outside of Amazon, which is a really big playing field and growing. And so, all the tailwinds are certainly at the back of Shopify. And it's just a matter of, how well have they really executed this quarter? How much were they able to push their expenses down? Because I think on the revenue side and the consumer adoption side, it's going to be extremely impressive for foreseeable future.
Andy, a quarter ago, something happened in Shopify where their earnings per share expectations were a nickel and came in 55 cents. The stock gapped higher and has really never looked back. It was in the high 40s when that came out. Now it's 90. So this has been an incredible run. It's approaching overbought. There's actually more downgrades than upgrades right now. The real question is, from a trading perspective, has this stock, because Wells Fargo's note on Shopify said they need the next thing because their good holiday sales that they talked about, that's all in the price of the stock now. What is there another thing? And this stock has run so far so quickly, Andy.
Yeah, that is the biggest, caveat to this entire conversation, because I think the company is going to come out, post phenomenal numbers. I think they're going to have extremely good guidance going forward. I think that they're executing at a very, very high level. It's just, at some point you have to say, has Wall Street gotten ahead of itself? And so the way that I would approach this earnings event is, look, I want to play this in a risk-defined manner to the upside, where it doesn't need a massive move, where potentially even if the stock has a fairly neutral reaction, I can make some money. I'll leave you guys to show people how to do that. You're so good at that. But if I'm wrong and Shopify does pull back, because Wall Street says, okay, everything was baked into the cake, now we know what we know, it's time to sell the news, that's certainly a possibility. And if that happens, I want to have some capital to deploy into the stock for the long term, for a position over the long term. And so I don't mind buying shares on dips after earnings in extremely strong companies like this, where the stock potentially has just gotten ahead of itself. So I think of it as a twofold type of trade, and would encourage others to do the same.
Andy, great thoughts on that. A kind of a big picture question. I want to pick your brain as an entrepreneur yourself. I love to hear your opinions. How big is this partnership with Amazon as sort of the fulfillment side into disrupting kind of this strong position that UPS and FedEx have had in shipping? To me, this seems like the biggest story that no one's talking about.
Yeah, it's huge. And I think that the risks to UPS and FedEx and quite frankly, the Postal Service are much bigger than people think, because of companies like Amazon, companies like Uber, companies like DoorDash, who have figured out the logistics part of things. And once you've really figured out the logistics part of things, I think that everything else becomes fairly easy, at least relatively easy. Getting the equipment, getting the people on board to fulfill is much easier than figuring out the logistics. And so those logistics legacy companies like UPS and FedEx, they have some new competitors bubbling up that I don't think most people are really thinking about. And I like the way you're thinking on that, because I happen to agree fully that there are huge risks looming out there over the next 5 years for both of those companies.
Great conversation as always, Andy, with the compelling LikeFolio data along, showing us the absolute strength of Shopify. Andy, thanks for coming on as always. Have a great day.
You too. Thank you.
All right, Alex.